1 in the morning, the short-term volatility is still pricing at a premium, suggesting demand for hedge products as a care warning. We start watching for top edges reversing because it's going to sell off. It's going to catch an offer. Does everybody understand why we gave a care warning, though? It's not about reading me telling you. It's about you seeing it for yourself. Taking ownership. Does everybody know why there's a care warning in that market, Jack? Yeah? Everybody know why there was a care warning? Everybody was privy to the care warning, weren't you? Every single person. When we look at the SPY, you might be saying, no idea, what the hell are you talking about? Why was there a care warning on the SPY? Well, we told you why it was, because we made it blatantly obvious by tweeting it, why there was a care warning. And you might be saying, but we've had a lot of care warnings into this top edge. Yes, we have. Yes, we have. Why? Because there's been a lot of care warnings that we've had to warn everybody about, and were we right? Has the market rode massively higher over that period of care warnings, or has the market had some pretty severe corrections over that whole period of care warnings? But you'll find that we've been absolutely spot on. If we look at the pricing of volatility, does anybody see why we've been issuing care warnings? Does everybody recognize why we've been issuing care warnings? This is the important part. It's not that we have, it's why have we? Since this point here where we had the closing highs, we've never went any higher than that day itself. Never once have we went higher at any stage, which means they're pricing in a volatility problem in the marketplace. As a result, we start being very scared of anybody buying higher, or not very scared of them. We're delighted to see them, but we're scared for the marketplace. We're scared for the buyers that are turning up at those higher prints, because they shouldn't be. They shouldn't be turning up at higher prints, and we are ready to take advantage of them by ripping the piss out of them eventually by selling into those higher prints the whole way through that process. And by issuing care warnings, we've had that sell. By issuing care warnings, we've had that sell. By issuing care warnings, we've had that sell. And by issuing care warnings, we've had these sells at higher prints all the way through this beautiful little process. By issuing care warnings, we've had that sell through this whole process. And this is what we've got to try and remember when we're looking at the markets, is what are they pricing in? Now, there's obviously other pieces of evidence that we can try and link to, and we can look at whether the specs are involved in this whole process, or whether, there's a lot of things we can ask about this. We can ask the 9-day volatility we covered yesterday. If we look at the 9-day volatility we covered yesterday and we ask the same question, it's incredibly doing the same thing, isn't it? And you might be saying, yeah, but. There's a lot of care warnings in here. Damn right there's a lot of care warnings in here. Because if you look at what happened on the previous rally, it was nothing like that, was it? It was all bulls, 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 and more bulls. It was all bullish. It's not a care warning opportunity there. Everything's going up. Volatility's going down. There's no opportunity to issue care warnings during that period, but my goodness, there is through this period. And that period there, we've been absolutely spot on. Absolutely spot on. So we can see that this works. This process that we keep asking you guys to identify on a daily chart, for argument's sake, and we start asking you to be very aware of as these stories evolve on the daily chart, and we keep asking you to make the sell commitment, to go into that deal, get that short. Don't be the guy that's on the sidelines watching when your pension fund gets wiped. So you guys can take the necessary precautions when you start seeing these care warnings. We don't do it for the good of our health. We do it for the good of your financial well-being. And when we start thinking about things like we talked about before, like puts and calls, and I don't intend to do it in classroom, we can see the puts and calls caused the stall and the price goes back up. But the puts and calls are still very high, even when the price does go back up. That's why we're getting demand for volatility, because the puts are still very high when the price goes back up. They shouldn't be high when the price goes back up. That means that there's people taking speculative puts at higher prices. If this price starts selling off, we may well see even more, but at the moment we're not seeing the big spike. If we see the big spike, of course, that gives us more evidence that perhaps we've now got a new low in place. Like this one here, for example. A big spike, a new low in place, the price rallies beautifully over that period. But this elevated puts and calls, as the price is elevated, that's not bullish. That's bearish. That's people taking cheap put option hedging. And because they're buying lots and lots of cheap put option hedging, the price of volatility is getting driven higher. The price of volatility is visible on this chart here. As the puts go up, the price of volatility is rising, and that blue line is falling. And that little picture there is giving us a perfect idea about the shape of the market at a top edge. Remember, this is about at top edges. This is about the top edge. It's not about the down candles. It's about the up candles. Putting yourself into the right context, putting yourself into the right storyline at the right time allows us to make the right decisions, and that's what we've been doing. That's why we've been issuing care warnings through this top edge phase. Incredibly important, and yet very easy to spot. Very easy to see it, very easy to understand it, which means we simply try and work back against any trapped buyers at higher prices. We try and take advantage. Does everybody understand this? Just these two lines, just this process. Does everybody see that we were spot on every single time? Absolutely killing the top edges up here. Killing it, guys. Absolutely killing it. It's crazy, but it's been done live in the room, guys. You've seen it here. You've seen it here. Did anybody buy some more beans? Cliff, you were talking about beans earlier. Did you buy any more on that down candle? Back into the day low. This went all the way back up to the upside. So the little conversation with Cliff about that that soybeans being a buy trade today because of the cash open. And you can see it's since that conversation, there's been a new low price put in and a great opportunity to buy some beans off the 59s. It's rallied up to around about the 66s. It's another $350 profit per contract on the beans, guys. Another $350 bean contract long. Perfect. Love that. We love that trade, guys. How did that